they should go either with mutual fund or they should go with PMSs. There are a lot of good PMS or AIFs. It again depends on which income bracket, how much disposable income you have.
Yeah.
Say example, if you have say less than 5 lakhs or 5 to 10 lakh rupees to invest, and you don't have time, okay, you don't understand markets, and you are emotionally reactive, and also you want to invest because you have certain goal, I think mutual fund becomes the go-to place.
Hello and welcome to Market Pillars Uncovered, a series where we speak with visionaries who are reshaping India's financial future. And today is no exception, as we're happy to be bringing on board Mr. Jay Prakash Gupta, the co-founder of Dhan, a dynamic and disruptive force that's reshaping the Indian investment landscape. JP, as he is commonly called in the market, is going to be speaking with us about how wealth creation can be done for especially those under 30. JP, thank you so much for joining us today on Money TV.
Thank you so much, Mubina. Thank you for having me in your show.
So, there have been a big chunk of young investors who have entered the Indian equity market, particularly in these last 5 to 6 odd years. Tell us, what do you think of this entire phenomena that we've been witnessing? Gen Z investors, they're kind of changing the game of sorts in Indian markets. What do you think of that?
Yeah, that's a great question, Mubina. Just to give some data, right? 2018, total number of Demat accounts in India was 4.5 crores.
Okay.
And today we have around 22 crores.
Wow.
Okay, so in last 6 years, the number has almost grown 5 times. And there have been a lot of reasons for it. As you rightly mentioned, the Gen Zs are redefining the way investments are being looked at in India, especially in India. So there are few observations which I feel are responsible for it. We find there is abundant data available online. You go to YouTube, you go to any social media channel, you follow any influencer, you will find a plethora of information available. Okay, that has really changed. And this information is not in some jargons, right? So these are easily understandable. And on top of it, there are also data available in regional languages. So it's not necessary that you only need to know English if you want to invest in capital markets. So that has really worked. Earlier, I remember at our times when we started our career, we need to wait for economic times where you would get once in a week, the rates of all the stocks and all the futures and options. Time has changed. Now you get everything real time. So that has really worked. Second thing which has worked really is a overall behavioral shift which you have witnessed. Earlier, if you remember, our parents, okay, for them, the investing means it used to be the real estate, fixed deposit or gold. Okay. Generation of today, okay, they feel that, okay, the perspective towards investing has changed. It's no longer the gold and FDs, but they also look into newer revenues. That's how you see the way F&O has grown, the crypto investing, the crypto trading has grown. That's second thing. Third, I feel is that, overall the disposable income in the hands of the youth is much higher than what it used to be. Okay, and they are risk takers. They want to have a control on their own finances. And on top of it, the whole ecosystem which the government is providing. If I have to talk about it, Jan Dhan Yojana has been a great, factor. If you see how UPI transactions have been adopted in India, okay, the way investing platforms have really made it very easy for you to just open your account and start investing. Earlier, just to get a Demat account opened used to take 48 hours. Okay, now you can do it in 15 minutes time. You can open a bank account in a day's time.
Okay. What, in your experience, have you seen young investors make as mistakes, most common?
See, the first, it revolves around what I mentioned,
okay.
Right?
Okay.
So, I'll take my example.
Yeah.
So, when I passed out from college, when I earned my first salary, I was into markets. Okay, I was working for a broking house. I felt I know everything. Okay, And when you have those things, you know कि okay, मुझे पता है आज सेंसेक्स क्या क्लोज होगा, मुझे पता है आज निफ्टी क्या होगा. That's what I'm saying. You should never time the market. Okay, that mistake happens. Now, second big mistake which a typical trader does is there's something called beginner's luck. If you start your positions, it may happen that the first few trades will make money. Yeah, that makes you complacent.
Yes.
Now you start feeling that I know it all, and then you have a bigger exposure without much of the knowledge, and that becomes very dangerous. And you don't have a goal, right? Whether I'm taking such a large exposure for what purpose? Do I want to earn ₹1,00,000 today in a single day, or do I want to buy a car? Do I want to go on a holiday? And if I'm coming and betting to earn ₹1,00,000, at what point will I stop? If those things are not defined, you have not defined your parameter of taking any trade. So you are there will eventually be a situation where you will overreact. You will have no control on your emotions, and you will lose money.
Okay, let's talk a bit about some of the different asset classes that are available. Gold. Let's look at that, because we have seen this increase in pricing. What do you think is the best way one can invest in gold? And also, let's talk about how much should one invest in gold?
So now we are at a lifetime high on gold. ₹1,00,000, 10 out of 10 grams. I think nobody would have anticipated, at least even 5 years back. See, the easiest way to invest in gold is through ETFs. Okay, it's a digital gold. You get your units. There is no storage risk involved in it. You get it in your demat account. You can sell whenever you want. That's the easiest way. And you buy it in fractions. Because say 10 gram of gold will cost you ₹1,00,000, but 1 unit of ETF would cost you somewhere around ₹100. Okay, that's the easiest way. If you are into markets, if you know something about investing and trading, I think the next natural extension would be trading in futures and options
of gold,
which is of gold on certain commodity exchanges.
Yes.
That requires certain specialized knowledge because the product is a bit complex for a novice. I think so. Once you have spent some time in market, you know how to trade. I think that's the best way, because if you are able to manage your risk well, okay, your return on investment is very, very high, because those contracts are usually leveraged contracts. The third obvious traditional way of buying gold is buying it in physical form. But again, physical form has its own limitations. But people who prefer that they would sleep peacefully when they have a metal below their pillow, I think that experience nobody can take away from someone. So that most of the people especially in Indian households, especially in tier 3, tier 4 cities, still prefer to hold gold in a physical form. Now, coming to your question on what exposure one should have, I think if you are a beginner, or if you are young, I think your more exposure should be towards equity, because gold is something which will not give you phenomenal returns. It will hedge your other holdings against inflation. Okay, it won't give you any dividend and interest, but it can only secure your overall investment value, because gold is an universal currency. If you are in your late 50s, I think your exposure towards gold on your overall portfolio should be around 15 to 20%. And in the current scenario, when there is so much of uncertainty all around, I think having 20% exposure in gold is still better.
Okay, let's talk about equities then. And there are so many ways to get exposure to equities. One is, of course, by directly buying shares of a company or multiple companies. Then there's the mutual fund route. There is the PMS route. So explain to our viewers at what stage of life, or when are these different kinds of equity products suitable for investors?
Well, that's a very good question. I'll put it this way. I think when you should not get into direct investing. Okay. See, when you don't have time or knowledge, one, because you don't know what to buy, and your usual inclination is to only buy what your cousin is saying or what your best friend is saying or what you overhear while traveling somewhere. So that's absolutely no.
Okay.
If you don't have time, if you don't have knowledge, you don't understand finance, you don't understand how to analyze companies, don't get into direct investing.
Okay.
Second reason why you should not get into direct investing is when you don't understand the complexities which are around. You need to know something basic about how a company operates, how the share market functions, what is EPS, how the company's profits are defined. So something technical, if you don't understand that, you should avoid it. Okay. And third reason I think which is very important is if you are emotionally reactive. Okay. So any fall in market makes you panic. Okay. Or when the market starts going up, okay, you just rush to catch a trend. Okay, in those cases, it's found that you have not done your homework well. Okay, and you will end up buying a wrong stock. So people like who fall in this such category, they should go either with mutual fund or they should go with PMSs. There are a lot of good PMS or AIFs. It again depends on which income bracket, how much disposable income you have. Say example, if you have less than 5 lakhs or 5 to 10 lakh rupees to invest, and you don't have time, okay, you don't understand markets, and you are emotionally reactive, and also you want to invest because you have certain goal, I think mutual fund becomes the go-to place. Because the fund is being managed by some professional people. Okay, they know everything about it. They have a lot of tools and resources to analyze a company, to analyze a sector. So you give your money to the best guys, who are in this business for decades, and they will manage your money well. If you belong to a category where you have a lot of disposable money, so PMS is another alternative where the minimum investment ticket size is 50 lakhs rupees. Okay. So again, your portfolio gets a concentrated, exposure. The fund managers are more experienced. They know if I have to manage 50 lakh and above for an individual, okay, they require a much sharpened skill sets. The third category obviously is when you want to, you have money, one. Second is you want to delve into a lot of asset classes. So AIF becomes, which is alternative investment fund, that becomes a natural place where the AIF has a discretion to invest your money either in listed assets or unlisted assets, even on real estate. So somebody managing your money professionally, and he can put your money basis the rationality or the understanding the fund manager has. So you get best of listed as well as unlisted space where you can invest your money.
I want to talk to you a little bit about whether and to what extent does cost of investing or trading cost matter, and what are the factors one should consider when they are trying to choose a trading platform or a broker?
If you are a small trader or you do lot of trades, okay, you are not a long-term investor. So your trading cost really matters, because the more you churn your portfolio, okay, just for the user's understanding sake, a brokerage is just one component of it. Okay, there are exchange transaction charges, there are securities transaction tax, there is turnover tax, there is stamp duty. A lot of money goes to exchanges and the government. Okay, a broker only retains the brokerage or the commission which they earn. And if you do a lot of churning, if you are an intraday trader or you buy and sell 10 times in a day, I think the brokerage cost and the other transaction costs really matter to you, because they actually eat away your profits. So if you are a regular trader, I think you need to be very conscious of the fact that I should choose a platform where my brokerage charges are minimum in the industry.
That's the one thing that's something that you can choose, as opposed to the fees that go to the exchanges and the government.
Exactly. And apart from that, there are other. So when you get into trading, I think what is more required apart from your brokerage is your seamless execution of trade. Okay, if the app hangs, okay, if does not give that a good UI feel, okay, you would not love it. Okay, third, something is important is that how frequently you can withdraw your money, or how quickly you can transfer the money. So the seamlessness on the fund transfer and fund withdrawal is again very important. As a trader, one should also see that what kind of features the app has. If I am a trader, if I am an option trader, okay, does it have enough of tools available where I can analyze? Okay, because see, Gen Zs, they have seen the best of the apps, across other things like take for example Amazon. What a wonderful app, which really makes a customer the king. Okay, you buy something and you want to return it, there's no question asked. Okay, they have seen those. They would be benchmarking an investing app with something which they use in their daily lives. Something for shopping, something for booking tickets and all. So that seamlessness, that customer centricity, or the investing app or the trading app also has to reflect. I think these are the few things which should be kept in mind. For a long-term investor, the general philosophy is I buy and I hold.
Yeah.
Okay, for them, a small bip here and there, certain basis point of brokerage doesn't make much of a difference because they're here for the long run.
All right.
Yeah.
According to you, and again, this is directed to all of the new investors who want to enter the markets, what is the best way for new investors to educate themselves, to learn about the markets, to learn about investing?
Yeah, so it's a question, which if I start answering in a traditional way, this will bring a lot of gyan and the people would get bored about it. Yeah. So you need to see few of the basic tips, So first is that you need to develop that habit of analyzing and reading. Nowadays nobody loves to read newspapers, large columns and all. So at least subscribe to those financial content, some newsletters, okay, where you read about what has happened in the financial market in a crisp form, where in 5 minutes you can wrap up whatever you want to know about it. Second, it's important that you need to go to certain tools or certain apps, which gives you a lot of data about company. Like we at Dhan, we have something called ScanX. Okay, where you want to analyze any company, any sector, be it on fundamentals, be it on technicals, you can always do that. Okay, so those kind of tools you need to go and check, and start picking the basics out of it. Okay, third, it's very important again for you to be part of certain community. Okay, because the more you interact with like-minded guys, okay, you will learn from their experiences.
New perspectives.
Okay, so you know what to avoid, what mistakes I should not do. And that can, so trading is something, where the trading happens in silo. Because when you are a trader, you are in own mental frame. But when you are not trading or not investing, you should meet a lot of like-minded people. From their experience, you will learn a lot. So again, go to any community. Like for Dhan, there is a Dhan community. Okay, there would be other communities as well, where you get an opportunity to interact with them, share your experiences or share your mistakes and learn from them. So that's again required. So I think these are the basic things one should keep in mind. Always keep a habit of, looking around you. I think this is very important. I'll just give you a few examples here. See, when we wake up in the morning, okay, what's the first thing you do? You either switch off the alarm clock, which is around you, or your smartwatch. You brush your teeth, you take bath, you have your breakfast. So just observe your daily routine for a day, and try to correlate which all brands are you using around. Okay, and how long are those brands in existence for? Okay, so when you brush your teeth, the very obvious choice for any Indian is they would be either using Colgate or something. So you can always correlate that Colgate is in existence for how long. Okay, so which company makes Colgate? Which is the parent company? Okay, is that company listed, and it's listed for how long? You can come on Scanx, find about that company, what kind of dividends they have given, whether that company is profitable or not. Okay, I want to order food. I'll order either on Swiggy or on Zomato. Okay, I can always go and check what Zomato does, what's his business model. Okay, I have certain money in hand, I'll put it in bank. I'll go and open an account in a bank where I feel that the bank has a customer first approach. The bank's app is seamless. Okay, it gives me that seamlessness in transacting. Okay, you use air conditioning. You go and check which brand makes it. So if you go and observe things around you, you will find multi-baggers. You will find companies which are blue chip stocks. You will find companies which are giving good dividend yields. So that way you don't have to ask someone कि मुझे 4 company बताओ जो मैं analyze करूँ. You can analyze it from your daily life.
The next multi-bagger might be in your living room.
Yeah, exactly. Yeah.
Very interesting, very actionable insights indeed. Not something we all know. Reading is important, but I think what you've shared is also something that literally all of us, can implement and do. So JP,
more than reading, I think it's observing things around you is very important. So you'll find. So I'll give an example. So my dad. He used to always love MRF tires.
Okay.
So when I started working, when I had my first car, I thought if I have to replace the tires, I'll go and check whether MRF tires are available for the car or not.
Yeah.
Okay, so that gives, you also have some kind of memories with it. Okay, and if you are a loyal user of MRF tire, you'd rather track the company by the share and you know what MRF does today.
Of course. Yeah, absolutely. All right. Well, JP, you've like I mentioned, you're commonly known as JP in the market. It's your nickname. Tell us a bit about your own personal journey. What pulled you rather into the world of equity markets, and how did it all begin for you?
I always had this curiosity of knowing how market operates, how stocks are bought, how stocks are sold, how they make money. And I always wanted to be into capital markets. But while studying, I did my commerce from Calcutta University. Then I got an opportunity to study my post-graduation. And even in my post-graduation, I was always very inclined to subjects in finance. We had a subject in derivatives, so I used to love that. And it was always that, if I get an opportunity to work, I'll work in companies, which deal in markets. Okay, so at that time we had very limited exposure of what is stockbroker, and all those stuff. So I was lucky enough to get my first break into a broking house. From post my MBA, and that company was into derivatives. Okay, and they were one of the largest derivative brokers in the world. So and in India at that point of time, derivatives was just upcoming. Okay, so it was a great opportunity for me to learn how option market works, how it works in international markets, what are the things which are required to be done in Indian markets. So there, I got my first break in the industry where I wanted to be, and the journey started from there. Then I got opportunities to work with large organizations, financial services companies, and since I had an inclination and that was a secular bull run for Indian markets, and I had inclination. Second, the tailwind was there. So, I grew very fast in my, career. So, I became kind of a CEO of a large organization handling businesses there, So, entire equities, derivatives, I have seen it very closely how the market works. And I got an opportunity to build online broking platform for one of the largest brokers at that point of time. That gave me a different level of exposure. Okay, so there, then again I got an opportunity to work also on the commodities side. Okay, so with equities, derivatives, and also learning commodities, that gave me a lot of exposure. And I built businesses and scaled for another large brokerage house where one of the international banks had invested in that broking. Okay, so through that I got an opportunity to learn currency as well. So by 2011 I had exposure on equities,
All segments,
derivatives,
almost, yeah.
commodities, currency, except for debt.
Except for debt. Yeah.
And I was building business. I was built it from scratch, and businesses were profitable. And I was young, and I thought, okay, I had some amount of savings by then, and then that entrepreneur thing kicked in. I thought, okay, now why to build for somebody? Let me start on my own.
Yeah.
And I plunged into getting my own, forming my own company, getting my membership. That's how Moneylicious. I named it Moneylicious. And my wife was there, so she also supported me. She became one of the other directors. And I think over this journey, my friends, my colleagues, people who believed in me, they joined me, leaving some bigger brands. Okay, I really, I'm grateful to them. And also to my family, my parents, my wife. She has been an unwavering support, all those thicks and thins, on those struggling days.
Well, when you're not thinking Dhan and when you're not thinking equity markets, what do you like to do as a hobby in your off time?
I love running.
Okay.
Okay, so I'm a marathon runner. I run 4 marathons a year, a mix of half and those, so that I need to keep fit. That's one area. Second is I love to spend time with my family, with my daughter. Okay, so whenever I get time, I just love to spend time with her. I love reading. Okay, so I read not fictions, but something where I can learn.
All right. Well, wonderful to hear from you, JP. Thank you so much for sharing your story, and not just your story, but even insights into investing. You have a wonderful many years of experience, and I think we've got to learn a lot from that. So
it's been my pleasure. Yeah, thanks. It was wonderful interacting with you.
Thank you.
Thank you.
Well, there you have it. That brings us to the end of yet another episode of Market Pillars Uncovered. Again, do not forget to write in the comments below as to what was your key learning from this episode. Thank you again for watching, and stay tuned to Money TV.